1st of January 2026 has come and gone, and that's when a lot of our new tax laws got implemented. And to be honest, I've had quite a number of people try to explain it, the new tax laws and reforms to me, but somehow I'm still confused. And today, thankfully, we are talking about the, show me the money and show me how much of the money is going to be leaving my account when it's tax time. But today we're going to be calling on some experts to tell us more about the tax reforms and speak to us on the new tax laws and its effects on the creative sector. Moderating the panel, but first, before I call on our moderator, the keynote. All right. Before we go into that, I'll be calling on Mr. Abaraham Popogbe, who is an experienced consultant and creator who specializes in accounting, financial, business, and tax advisory with expertise in business process development. He's an alumnus of Lagos State Polytechnic and an associate of both the Institute of Chartered Accountants of Nigeria, ICANN, and the Chartered Institute of Taxation of Nigeria, CITN. He has over a decade of consulting experience, primarily with Deloitte, focusing on the creative industry in Africa. As a consultant, he has led numerous financial advisory projects with multinational companies in the creative industry. Investors in the industry have also adopted him as a trusted advisor for safeguarding their returns. And through his work at Aid1, he finds great satisfaction in helping small and medium-sized businesses realize their ambitions. As a co-creator, he developed a dedicated accounting solution tailored to project, content, and film production, a process he designed with his project team during years of advisory with Deloitte. Mr. Abaraham is currently the lead partner, creative industry at Aid1 Consulting, Ilupeju, Lagos. Please, can we put our hands together for Mr. Abaraham Popogbe as he gives his keynote speech. Thank you.
All right, good afternoon, everyone. Okay, so I will just be very quick with this, and I will try to explain as much as I can on how the new tax laws impact the creative industry. I must first say that really, there's not much to worry about. I would say that clearly. I think that the noise is a lot, but sincerely, you can actually sleep. And I think the creative business can actually flourish with the new tax law. I also think that the businesses across Nigeria can do well. What Nigeria is implementing now is what we, the professionals, had been telling them some 10, 12, 13 years ago. When I was a tax advisor for MTN, I worked in MTN before I joined Deloitte. These are the things we do say to the government at that time. But it's good that Taiwo Yedele is now picking this up, and he has the privilege of working with the Tinubu government. Do not mind how the government spends the money. Just focus on what they are trying to do. Accountability will now be another thing. But in terms of the correct thing, sincerely, we are doing what they are doing in Kenya. We're just doing it now. We are 12, 13 years behind, really. So, but again, do not mind in terms of how they spend. If it's how they spend, you should not pay tax. You know that, right? All right, so let's talk about it very quickly. So what I'm going to do quickly, I'm just going to focus on 4 things, and I'll be very quick because I've got 2 great people with me, and we're going to discuss this very shortly. One, I'm going to explain to you what you, the creatives, should have been doing before now, even before the new tax law. You see, it was just media buzz that made tax popular. Before now, it was popular, but it wasn't pinching. But this one looks as if it wants to pinch. But there was something you were meant to do before. So really, the government president is still going to say nothing really has changed. That's one. Number 2, what I'll try to now do is to now tell you maybe a brief of what is changing in the tax law. But I'll be very careful because this audience seems to be like the audience who doesn't know too much maths, right? So I will not focus too much on that, right? Now, in terms of, I don't want to make it too complex, right? I don't want to make it too complex. So I'll be very careful not to break your head, right, with the numbers. But one thing I know I will say, which is important, is I will tell you the game-changing benefits that you have in it. Both as you as an individual, and then for those of you who run business in the creative industry. And finally, I will just tell you how you can protect the value of your creative work. And I think there's so much to do about that. In terms of you as an individual, what were you meant to do before, normally, as an individual, as a freelancer, as a contractor, as somebody who is not registered with a particular company, working for a particular company? There's just one simple thing that you are meant to have done. One is for you to have a PID. You should have had a PID. Now the government is saying you no longer need to have a PID. The government is saying that your NIN is now your PID. We are 10 years behind about that. In other countries, that is the norm. So now, number one, already you are trapped. Because your NIN will now be the thing. It's not rolled in yet, but it's going to happen. So before now, you should have had a PID. So when somebody charges you, maybe for those of you doing freelancing work, somebody charges you withholding tax and they deducted 5% withholding tax, you don't get to see the alert on your phone or get the alert by your email saying that you have a credit of this amount. You don't even chase it. You don't even chase it. But you don't know that you're already paying tax ahead. Withholding tax is just a system to just hold you a bit. But once you didn't have a PID, somebody just generated PID for you and paid for you, and then you didn't go and ask. And lastly, really as an individual, you're meant to file your annual returns. I'm sure everybody in this hall, you are likely above 18. Almost everybody in this hall. So everybody above 18 normally should file a what? A return. No, but don't be afraid. You can actually file a new return. But the truth is that you don't just know. The truth is, just file something. Okay, that's one. Right? Let me be quick. If you're a registered business, if your business is a limited liability company, you're meant to charge and remit VAT. I've not seen any segment in the creative industry that is free from VAT. I'm yet to see it. Almost all are VATable. You're meant to charge and remit. Don't forget, you also suffer VAT. I've heard a lot of conversations say there's double taxation, double this. Sincerely, this is not the place to analyze it. But to be honest, if you're a creative person, you really need to be interested in the finance of your creative work. Most times, it looks as if most of us are interested in just the buzz and the hype. But I think you need to just bring yourself down a bit and understand 10% of the numbers. And if you do sincerely, it will make sense, really. So one, you need to file VAT in the past. You need to charge withholding taxes from contractors you work with and remit. Number three, you need to pay personal income tax for your permanent staff, as in staff who work with you permanently. And finally, at the end of every year, your company needs to file its annual returns through the FRS portal called Tax Promax and other things. Basically, things you should do, but nothing has changed, even in this new tax law. And finally, if your business is the Anko, I mean, you know what I mean by that? The one you do as business name. Yeah, you're almost going to do everything I've said earlier, just that you're not paying CIT. You're paying personal income tax on your profit. You know, like I said, I'll be very careful not to start discussing the jargons with you, so I will not bore you. But basically, the new tax law is not bringing anything different. To be honest, I thought the slide was actually changing. I'm in my third slide already. All right, maybe we should just go to maybe the four. Yeah, I've moved past here. I've moved past the next two. Forgive me. I think I'm on my slide 4 or so. Yeah, next one after this. Next after this. Yes. Now, I'll be very quick. When the Dr. reached out to me, when we had the talk, it was very clear. So what is the benefit? What is the benefit of the new tax law to you in the creative industry? To be honest, there's maybe one or two parts. The law wasn't really clear and call you out and say, I'm dashing you the creative industry. But you are a priority sector. To be honest, I myself, I used to doubt you before. Myself. I used to doubt you. I remember where I used to, in Deloitte, I used to be in the oil and gas. And what drove me into the creative industry 12 years ago was a stroll. I was only told to stroll to a particular company. The owners of the company, when I say the owners, the investors of the company that invest fund in Africa, they only said, we need to check what these guys are doing in Nigeria, in West Africa, to see if the money we pay for content at that time in USD was as in almost equal to the content that was being generated to this particular company that I was sent to. Now, there was nobody in the creative industry in Nigeria to attend to the West Africa business matter. Everything about entertainment, creative industry has always been sitting in the US, in my own firm, that's Deloitte at that time, and partly in South Africa. You can imagine that South Africa was even having more, and then the US. And then they picked me out of the oil and gas industry and told me that it is the same thing. They said, just like you invest money in developing a rig to extract how many barrels of oil, to see, I invested $5 million on this, how many barrels of oil did I get, and if I sell it, how many? And what I was just meant to do was go to this particular company, they've invested this amount of fund, check the content, check the revenue, and advise us if the investment is what just like the way we do in the oil and gas. That's what took me in. And I was told, you only have 1 month for this assignment. Because what are they doing? They just go playing. I remember very well. They go playing, dancing. You see, they don't do anything. Just go there 1 month. And I remember I was given 2 associates. And the 2 associates were my students. They were students in the academy. And by the time I got into this particular company, I ended up staying 4 years. 4 years instead of 1. And since then, I've not returned back to the oil and gas industry. I've been cozying with you. I love it here. It's so sweet because there's so much, not just because of the value. There's so much value we've not seen. I guess we heard it today. But the truth is there's so much also education, other side of it that we don't see. And so this is a very brilliant industry. Right. So let's talk about the benefits quickly. I'll start with you, the individuals who still run as, I hope I'm not too fast. I need to be fast anyway. Let me start with the individuals very quickly. Those of you who are still running as freelancers, or those of you who run and co business, that is the business name. Maybe 2 key benefits you can see. One is, I'll start with this. You know, a lot of people have him, and the law was very clear. But the truth is, knowledge is key. Knowledge is key. I think the greatest problem is knowledge. So you see this whole noise. The law clearly says that your total revenue as a contractor or as a freelancer, the tax you pay is not on the whole revenue you earn as a person. No. It's clear. Expenses related to your work can be deducted before arriving at your taxable income. Meaning if you did 5 projects and they paid you 5 million for those projects and the whole of the year, it could cost you to fly down to Calabar to shoot that movie, right? It will cost you some money to buy your best costume. It will cost some money. I know you don't track it because you guys don't have time. But the truth is, at the end, what is taxable is your net. Your 5 million minus the core cost you incurred in delivering your job. It then means you're paying tax only on the net. And guess what? In most cases, you've even paid the tax ahead. Because somebody has charged you withholding tax there and there and there. Yeah, and you don't know. So by the time you are even going to lie, if this country was all structured, by the time you want to lie, you can't even lie, because if everybody deducted withholding tax from your 5 million, from the 1 million, if you go and lie to the government that you earn 2 million a year, the system will bring it out. Because you are paid withholding tax ahead. But people don't know this. Anyway, that's number 1. I'm not supposed to teach you too much maths. The second one is rent relief. Now, to be honest, even seeing this, to be honest, I had an HR consultant who was talking to me yesterday. She argued with me about this matter, and I said to them that this rent relief is a benefit, but it's also a trap. How many people in Lagos who have that now, because the government is only capping your rent relief at 500,000, meaning what the government is saying, which is a benefit to you anyway, is that your total rent in a year, 20% of that rent is free from what? From taxes. So if your profit, your taxable income, meaning the remaining money left with you as an individual, is 2 million. Let's say, it's 2 million. And you're supposed to pay tax on 2 million. And you rent in Lagos is 3 million per annum, assuming. That's very low anyway. 20% of 3 million is how much? 600,000. Unfortunately, you can't claim the whole 600,000 because the government has capped it at what? 500,000. So you can only enjoy 500,000. Meaning, of your 2 million taxable income, you can still then deduct how many? 500,000 and pay only tax on 1.5 million. But those of us here in Lagos, be sincere, which house will you get for 3 million? It's still very bad, that bad. Yeah, I know, but for some of us, really, I don't know. Maybe there are many, yeah, I agree with you. There could be, yeah, true. But I know for most of us that are all these high-end people, you stay in very big places, fantastic. But again, this is the relief that you have. Does this make sense to a point? One, that's to you individuals. Let's talk about the companies now. For the companies, I think during the course of this session, somebody mentioned of it. You see, before now, there was a 25 million mark. If you're a limited liability company and your revenue is 25 million, you will not be paying the regular CIT. That's what I call company income tax of 30%. But guess what the Tinubu government has graciously done? They pushed it from 25 million to what? 100 million. That means if you earn 100 million and below, you are not paying CIT. That is not a priority. Okay. Unfortunately, they excluded people like us. Professional service firms were excluded. But for people like you, you are what? You get the benefit. That's one. I can go on and on, but again, to be honest, I'm really trying to be careful because of time. I can start picking it one by one. You pick the first one there, 100 million. There's also, look at this. Capital allowance, priority sector, and there's one other one here. Yes, economic development tax credit. For people like Kunle and Uncle Kunle and Auntie Mo, or those of you who are doing a lot of investment in infrastructure, sincerely, if you look at the books properly and if you're being properly advised by your financial advisors, you pay lesser tax because of these gains. See the first. Capital allowance, you got 25% initial allowance plus 20% annual on cameras, editing rigs, and softwares. Yes. But again, if you don't know, it's a problem. If your accounting is not right, it's a problem. May I even just tell you something clear? We talk about tax, but the truth is, before tax is accounting. If there is no accounting, there is no tax. So if you're not accounting, if it is 90% accounting, or should I put it this way? It is 90% structure and accounting before tax. Because structure will determine accounting, and accounting will determine tax. But what everybody is focusing on is they're focusing on what? On tax. No. Focus on structure, then accounting. In fact, in the creative industry, that will first give you value. Value. That will help you to know the value, the worth of your creative work first. But in this industry, in Nigeria, not all of us are structured. Some of us are structured, but not all of us are well structured. In such a way that you can know the value of your creative work. So leave the tax. In fact, you pay the barest minimum tax if you do structure well. And then accounting well is all games. And you need to play the game. All right. Quickly, I talked about, look at this new one brought in there. 5% annual tax credit for 5 years on qualifying capital expenditure for priority sectors. Do we understand that? So that is another part. Again, so much of many benefits you can count. Let's go to the next slide. Next slide, quickly. Okay, so yeah, let me just talk about this. And it's very important I say this. So what should you do? What should you do quickly with the new tax law? Number one is you need to sleep. And the only way to sleep is to have structure. So one, strategically structure your business, including your contracts. Do you know you can turn a sale agreement into a commissioning agreement? Maybe you don't get it. You are selling a content, but to avoid tax, you can turn it around and turn it to a commissioning content. Just to avoid tax. So you pay tax only on the production fee and not on the reimbursable. Number two, proper records clarify true value. The truth is, there are very few accounting applications that are dedicated to the creative industry. Very few. That can help you track And that's one important thing. Number three, compliance protects earnings. And that's the truth. If you try to comply to the little barest minimum, I think it will protect you. Do you know it is actually cheaper to do what is right than to do what is wrong? It is cheaper to structure than to pay bribe to the government people. Forgive my language, government people. Not all of them collect bribe, but it's cheaper. In fact, sometimes you don't know that you're even paying more when you are actually tipping those guys than if you have done the correct thing. And that's the truth. Next slide, quickly, as I round up. Next slide. Okay, next slide. I'm not going to go to this because this is too much story. So what should you do as an individual? I will advise you very quickly. Maintain and understand your taxpayer ID. Include your payer ID on invoices to capture your withholding tax credit note. Track and pursue all your withholding tax deductions made on your income. Maintain a disciplined record keeping of all your income and expenditure. Apply the net income approach when filing returns. I'm talking to individuals now. And finally, file your annual self-assessment returns latest by what? By March 31st. And quickly to the companies, very quickly. I have 2 more minutes. Next slide, please. All right. For you, the companies, sincerely, I can say to you, just take a step back and critically evaluate your financial system for stakeholder value. Just go back and recheck. After all of the things you heard, this new tax law should make you better. This new tax law is going to catch a lot of people. That's very true. The system is now so dynamic. It's data-driven. So there's no hiding place, really. So you need to structure. Number 2, ensure systems that error-proof with no loopholes. What accounting system are you using? What accounting application are you using? If there are loopholes, it's a problem. In the creative industry, it's a problem. Number 3, structure creative contracts intentionally. And that's the truth. And number 4, engage professional finance and tax advisors. You can see, I didn't say tax advisors alone. Professional advisors first. It's first your financial advisors before tax. And finally, if you're a company, get your finance team together. Let the professionals meet and let them structure how things should be. I think that, next slide, I may not be able to go to the other slide because our time is fast spent. Has this been fine? Yeah, thank you.
Not a problem. Thank you very much, sir. Please don't leave. You're still going to be part of the panel. Thank you. Can we please give Mr. Abraham a round of applause again? All right, we're going to be moving on to the panel. Up next, please have a seat, sir. Thank you. Up next on the panel is Mr. Michael Ariyibi. Mr. Michael Ariyibi, MBA, ACA, AAT, ACTI, ACS, is an experienced tax practitioner with specialization in tax audit and regulatory compliance. He's an assistant manager with the Nigerian Revenue Service, where he supervises officers responsible for the assessment of small companies, individual businesses, and partnerships. He also conducts internal trainings for tax officers and works to ensure the uniform application of tax laws. He's a graduate of the University of Lagos and an associate member of the Institute of Chartered Accountants of Nigeria, ICANN. He holds an MBA in accounting and a Bachelor of Science degree alongside several professional certifications. He's a senior lecturer at Password Professional Tutors Limited, where he teaches public sector accounting and finance, business management and finance and economics. Can we put our hands together for Mr. Michael Ariyibi? Please, to everyone who's in the room, we still have a raffle draw that's coming up where you get to win a ticket, an economy ticket to the United Kingdom. So please stay back. You just might be the lucky winner. All terms and conditions apply. And this is powered by Voyage Quest. All right? There's also going to be lunch afterwards, so please don't rush off. This session is very important. Like I said, there's no hiding place. Government will still catch us one way or the other. And to moderate this panel is Miss Folashade Olusanya. She's an exceptional lawyer with an impeccable reputation for advising managers and investee companies in complex mergers and acquisitions and cross-border acquisitions, banking and finance, corporate commercial, as well as private equity and venture capital. Fola has a strong track record of advising government, DFIs, and developers, and has also garnered considerable experience in finance within Nigeria and the West African sub-region. She's a significant name in Nigeria and Africa's banking and finance space, and clients have noted, as cited by Chambers 2022, that she's a very hands-on lawyer. She gets involved in transactions and is very experienced. With over 28 years of practice, Fola has been part of several national and sub-national infrastructure finance projects and has led her firm, Jackson, Etty and Edu, to advise on projects, finance, and public-private partnerships transactions. Her practice covers a wide range of product areas, including rights issue, private placements, public offers, Eurobonds, corporate, and state bonds. Ladies and gentlemen, please put your hands together for our moderator of this panel, Ms. Folashade Olusanya. Welcome, ma'am.
Hello. Thank you very much. Good afternoon, everybody. I think for everybody, when they woke up on 1st of January, as Bisola said, it was all tax, tax, tax. And for the creative sector, we've all been told the stories that content is the new crude. It's expected that it is going to make $15 billion this year. It's going to employ 27 million people. There has been growth, 4.7 growth. Have you been seeing the money? So when you add the complexity of tax on top of it, you then ask yourself, where are you going to go to? But the panelists we have here are going to tell us it's actually not complex.
Yeah, it's not.
So I'll start with Mr. Ariyibi. Mr. Ariyibi is going to become all our friends because he represents the NRS. Mr. Ariyibi, the tax reforms, the Nigerian Tax Act, what is going to be the impact on the creative sector, particularly the film industry?
Okay, thank you very much. Good afternoon all. It was a privilege to be here. As a staff of NRS, I'm also here as a citizen of the Federal Republic of Nigeria. So beware.
Disclaimer.
The industry outlook regarding the new tax law, just like Mr. Abaraham have said, just sit back and relax. Because according to the new tax law, the creative industry have nothing serious to worry about. But before I proceed, there is a farmer whereby in his farm, he has a lot of bananas and monkeys moving to eat the bananas, and the farmer will come later in the evening and chase the monkey away. All of a sudden, the farmer died. And the monkeys were happy. They jump into the farm, they finish all the banana, they move out. The following day, they jump in, they did not see any banana. It simply means that the primary objective of this new tax law is not to win short. It's not to tax the roots, but to tax the what? The seed.
Tax the seed
it's not
and
to
not
tax
the roots.
the roots, but to tax what? The seed.
Okay.
The goal is not to kill the company. The goal is not to win shunt the company. Because if we win shunt today, where will the revenue come tomorrow? Creative sector have a lot of advantage in terms of their long gone benefits is going to be better off compared to where it was before the new tax law. One thing I would just advise is, in which Mr. Abraham have said that, record keeping.
Record keeping.
Record keeping, transparency.
Transparency.
Apart from you keeping record for tax purpose, it it add value to you as an individual and as a company. No investor will bank on you if they can't track your finance record. You get contract today is because of they check your finances, they check your transparency level. Just like Sister Mo have said, she has been, contract here and there, partnering with Netflix is because of they can track serious financial transparency with her. So the long gone survivor of this industry regarding this new tax law is 100% guaranteed. However, there might be slow down in the short run.
What do you mean by slow down?
If the enforcement is too rigid, we are talking about long gone. According to Adam Smith, it is someone that survives short run that will get to long run. Adam Smith said everybody will die in the long run. Abi? So what is going to happen in the short run? This year is the year of implementation.
Okay.
What is going to happen? And I believe, back to my first story, since we are not taxing to kill, automatically the short run will not be a problem. We will get to the long run. Thank you.
So are you saying in the short run there's going to be some sort of grace? Or
no, I'm saying
relief?
that there might likely be slowed down if the enforcement to comply is too harsh. Just like I'm beating a child that listen, no book. The child might die before he graduates.
Okay, so is the NRS going to have a lot more events like this where there is a lot of education?
Of course, it's work in progress. Just like, Nigeria tax law have always been, better. Today, law, before you wake up tomorrow, they might say this one, just like the way we have Finance at 19, Finance at 20. So the law keep growing every day, every day. They keep on looking at it every day. Any gap, they remove it, they replace it. That is just the way it is.
Okay, thank you very much.
You're welcome.
Abraham, in your presentation, you talked about structuring. You also talked about compliance. But beyond compliance, how can the creatives who are thinking about growth, how do they work with brands, platforms, and investors? How can they structure their operations when they are working with all these third parties?
Right, thank you. I think the issue of structure, again, to be honest, is still where one of the problems is. Like I made reference to my days in Deloitte that led me to work with this investor, right? The reason why the investor did not trust the system, why we had to come from Deloitte to sit in the system, was because the production houses they were giving money to, they could not account for the money for the commission content. But in South Africa, they could account. So the problem was now that they could not even respond to budget versus actual. Most of them didn't have application. Knowing this was Nigerian, so we did the Nigerian thing by pretending as if they were structured, by giving them structure. So we did an internal work of giving them structure first. For that reason, in fact, that was what led us to developing an accounting application, a creative accounting application that had not been done before. We had to create it and then gave it as a tool for the production houses to be using in such a way that the investor is seeing the use of the fund without anything. And guess what? For that reason, there've been more fund in that particular company today than ever, only because of system. That's number one. For our company, sincerely, today, a lot of people need to decide whether they want to continue to maintain the & Co business. Structure is key. Now that you had the new tax law, that you're 100 million and below, you're free from taxes, I think you need to register a limited liability company. Because
you're suggesting that
all
the business names should...
because that benefit applies to limited liability companies. You get what I'm trying to say?
Correct.
But even if you want to maintain your & Co, really, it should be for the smaller things. It should be for the things that nobody can track. But for the core stuff, because you can imagine what that would do for you. All of that incentive is only for limited liability company. If you keep your business consistently as a sole proprietorship business, the PAYE law applies to you completely, and not all of the laws I read here. So first is about structure, number one. Number two, to be honest, if you are structured, you'll be able to do businesses with the international brands. That's a problem these people were having. These guys are very straightforward people. They want to see your financial statement. You see. But again, and thankfully, sincerely, the past 10 years have been very good in the creation because a lot of businesses have stepped up. at least that I know. Many. They were not structured, they are now structured. They could now do a lot of things with other companies. And so structure, again, is important. Don't take your time here.
Okay.
Yeah.
Well, in about 30 years of my practice, I would say that in order to attract investment into companies, formalization, compliance, documentation, things people can track. All of us are investors in one way or the other. If you cannot track where your money is going to, it's unlikely that you are going to invest.
Yeah.
Many creatives have historically applied 5% withholding tax when they are engaging talent, crews, writers, and then they do 10% for rentals. With the new tax law, we're just seeing references to 2% in certain circumstances. Are you able to explain in which circumstances you apply 2% withholding tax, 5%, or those 10%, or what really applies, and how can the creatives apply this correctly? Mr. Ariyibi?
The issue of withholding tax, according to the law, according to the Act, there is something called withholding tax schedule. And according to the withholding tax schedule, we have the schedule show the classification alongside with the rates for both residents and non-residents. When we are talking about supply of goods, is 2%. Before now, we don't have 2% in existence. We only have 5% and 10%. For professional service, 10%. For normal fee or whatever, 5%. But now, the issue of 2% came in only on equipment hire, like camera or any capital equipment hire for the production.
Okay.
Just like it is being written in the structure, in the schedule, supply of goods. You hire it, 2% withholding tax. Now, the question now is, does that mean that I thought, okay, the question that is going on is that, okay, my crew, my dad should be 2% too. The question is, the money you are paying your crew, what in your transfer or your whatever, what is the description? Is it a fee?
Okay, how have you described the amounts that you are paying your crew members?
It's very straightforward. You don't need to confuse ourselves here. 2% is for hiring of equipment used in production.
Okay.
5 and 10% is now based on either is a professional or is not a professional. If it's a professional fee, like you hire an expert, 10% and is final. The person don't need to file before they charge the 10%. They just charge the 10% and move. That is for non-residents. So in a nutshell, the 2% that came in is for equipment leasing. However, like I said, the law is still in work in progress and implementation. We can wake up tomorrow and we saw another revised position.
So the applicable percentages are 2% for
2%,
goods.
5%, and 10%.
Okay, 5%. You didn't say what that applies to.
No, I said 5% to normal, it can be staff.
Non-professionals.
Normal, yeah, it's not professional.
Non-professionals.
Yeah.
I guess that's where the issue is going to come. So in the creative industry, in the film industry, who is a professional and who is not a professional? I think that's one of the things that the industry itself is going to have to help NRS come to a conclusion. Who is the professional in the industry and who is a non-professional? Because it does make a difference between 5 and 10%.
A professional is a person that you just invite to the set for a contribution. Like, let me put it like this. You know that this is the best hand you can call for it. You just hire him for, okay, I'm coming here to spend 2 weeks for this location, and you move. You pay the person specially for it. A professional is different from crew. You have a crew. When you are producing your movie, you have the set of people you want to work with. But on the other hand, you might call best hand that is more capable in relation to what you want to achieve. I don't know if I'm making sense in line with the industry.
No,
So professional is more or less like outsourcing a separate person, separate entity to come in for betterness of the production. Then,
Okay, so the questions...
No.
It's not black and white. When we come to the question and answers...
what is not black and white?
The way you have explained it in the industry is
different.
Is not clear cut, which is why I was already opening it. That I think this is
I'm
an
looking
area,
at this from the angle of
where the industry,
accounting and finance.
Yes, where the industry is going to have to make suggestions to the NRS.
Okay. What do you say?
I think this is, when you're preparing the guidelines, I think this is one of the areas that the industry has to make suggestions to the NRS so that there can be clarity as to who a professional is and who is not a professional, because the difference of 5% and 10% is a bit.
Okay. To be honest, if I were just to say something on that, then if I were you, I'm not a professional. I'm just a service provider, and it's 2%. Please structure the contract in such a way that I'm just rendering a service. I'm an ordinary human being. If you put it that way, it's 2%, then I'm free.
No, 2% is for goods, he explained.
It's not for goods alone. No, he said, is it for goods alone?
No,
not
goods
only for goods alone.
Or for your crew as well?
Yes.
Okay.
So I'll just say I'm crew. We are all crew, I'm telling you.
VAT and cinema economics, the continued application of the 7.5% value-added tax under the new tax system, how does it affect the sustainability of the film value chain? I know Ali had already had, it appeared that, what the amounts that are made in the box office, nobody's actually, a lot more education has to go on as to how that money is divided. And then we then have this 7.5% value added tax. How does that impact on the sustainability?
All right, thank you. That's a good question. And I think it's important for people to understand this, that in reality, value-added tax is a transaction taxes. It is more like the person consuming the service is the one paying. Somebody comes to watch, maybe the ticket is 5,000. The law requires you, because you're enjoying this service, the law requires you, the company giving that service, to charge the person enjoying the service 7.5%. Just like if you go to a restaurant to eat, you see the VAT on it. Even in Lagos, they will even add consumption tax to it.
Yes, it
Yeah. So it is you who is consuming the tax that is paying for it. It's not an additional burden to the person providing the service. The duty of the person providing the service is to what? Charge it and what? And remit. Now, number one. Number two, if the person rendering the service now knows the law, in order to manage his cash flow, because at the end, it's cash flow, where the company has suffered VAT in delivering that service, that company has the right to deduct all the VAT that he suffered in producing that service. And that VAT that he suffered is what they call impute VAT. So yes, he has charged somebody a total VAT of 500,000. But he, in the build-up of delivering the service, maybe for instance, the cinema people, maybe they rented a place and that place where they rented charged them VAT, yes. Right?
Yes.
You get, and maybe the place was 2 million and they charged a VAT of 7.5%. They've suffered technically some about, say, 170,000, right? Mm-hmm. When that cinema company wants to remit the VAT that he collected from cinema, people that came to the cinema, he first had to deduct the impute VAT that he has suffered. And it's not only on rent. So that means in his accounting, in the accounting of a cinema company, they need to account for VAT impute separately. If they don't log it in their GL properly, they will not be able to track it. So the law allows you to first deduct all the VAT you have suffered before you remit to the government. So in reality, that's one part. I know the other side to it because I had the issue of double tax, but because of our time, we won't talk about that. Yeah.
Okay, so
to add, sorry, sir.
Go ahead, because that's what I was going to ask you.
To add to what Mr. Abraham have just said, apart from the law of giving you room to remove your inputs VAT, another thing is that once your turnover is less than 100 million, no VAT.
100 million, no VAT. Is that
no
corporate?
VAT. Yes.
Corporate. I think that ties into what VAT. You had said before,
yes.
As to how do you structure your companies to take advantage of the tax law. So if your company is not up to 100 million, then you are able to take advantage.
No VAT.
No VAT. Okay.
Watch out for that. There's a lot of things underneath. I was asking him when he was sitting beside me. I was asking him all the questions. How will I know if my business is going to do 100 million a year? What if God blesses me? And to go to 120? I was asking him, but again, that's not the story for today. He has just said what the law is.
I I think we should stick with what the law is. When the guidelines come out, then we can have we can have a bit.
Would
more
there be an
flesh.
extra guideline?
Yes, of course.
Of course, there has to be guidelines. Implementation guidelines.
A lot of things going on.
We are waiting for the implementation guidelines.
You think so?
Yes, so can I say to the House now? Are you confirming to us that we are?
No, there will be definitely.
Yes,
there
certainly.
Will be.
Okay.
Certainly, there has
It's
to be
work in progress.
implementation
We are still in
guidelines.
January.
Yes,
Yeah,
we are still in January.
Yes.
And what I will encourage the industry participants and stakeholders to do is to make sure that they contribute to what comes out in those guidelines. If we sleep on what our concerns are, we will just get guidelines that do not fit our industry, and we will just be complaining about it. VAT threshold and its applicability. So how does it apply throughout the entire sector? I know we've talked about the cinema, but in relation to the other parts of the film industry, VAT?
It's the same thing, nothing changed. VAT, nothing changed. 7.5 across, the same threshold, 100 million. Apply.
Okay. So
Creative
if I'm not a
industry
company,
or not
if I'm not a
creative
company, I don't take advantage of that.
If I'm not a company, so
Yes,
far you are consuming, you pay VAT.
Okay.
Yeah.
For the individuals, can I do input and I'm a freelancer?
No, you
input,
can't.
output.
What do you want to input? The transport is it the transport you pay to go and buy food in restaurants?
Okay,
No.
on enforcement, there's a perception that enforcement in the creative sector is still limited. I still recall when a freelancer walked into my office and wanted us to advise. He said, but the only problem I have is tax. I don't understand it and I haven't been paying it, so I don't know what you people are going to do for me. With increased digitization and reporting, what are the real enforcement risks creatives should be aware of? Okay. You know, most of the creatives they're actually quite well-known people, and we like to ensure that their reputation is in order. So in terms of enforcement risk, it impacts on them a lot more significantly than other people.
If we are in the same page, the question is like, what trigger the regulation attention? Abi? What trigger regulation attention? Yes. Okay, number one, I would say high value transaction.
High value transaction.
Large irregular bank deposits without a corresponding tax filing. What do I mean by that? Mm-hmm. Irregular bank deposit without irregular filing. That is, we are seeing money inflow and we track the name. We can't find it on tax promise. No tax registration, nothing. It calls for alarm. Another one again is social media and lifestyle audits.
Social media and lifestyle audits.
You know, we know your business, we know your industry, and we compare your lifestyle with your industry, with your business is not commensurating. It calls for attention.
Okay.
And another one, to stop there, third-party information. Third-party information goes a long way. I might not know you. I might not know your firm. You know, maybe you have charged withholding tax. You've charged withholding tax on someone that do contract with you, and the person is not happy. And come and report to you, hello, Mr. Anke, there is one firm, I want you to go there. Third-party information. So there are so many things that can call, regulation attention a lot.
I think Mr. Michael has actually let out some secrets that we need to hold. We need to put in front of us very quickly. Before I turn the questions over to the audience, I will come to Abraham and say, many creators struggle to understand the true value of their work, whether it be licensing, partnerships, outright sale. From a tax and business perspective, how do you think the creators could go about the valuation of their intellectual property?
All right. That's a very important question. So I think for the IPs you own, I think one of the areas that will help you know the value of your creative work is first your cost of production. Your cost of producing that content, right? Of doing that thing. And it's not just the overall budget. It's also what formed it. What formed it is looking at all of the lines that include how much you spent on cast, how much you spent on rentals, how much you spent on acquisition, how much you spent on extras, how much you spent on the core, how much you spent on post-production, and who you use. So first is proper accounting, because that data itself will help you when you want to do something similar. That's one. The second part is if you have tracked the costs properly, including even tracking your barter deals. You can actually track barter deals and cost it. Because in the Nollywood industry, there's a lot of freebies. I know Kiki. Kiki knows Busola. So we help each other. And then you don't pay Busola for her real value because she's my friend. Okay. But if you really want to know the true cost, is value Busola and put the cost on it. It will just be what they call in accounting, what we call below the line. Right? You put it in, right? And so you can then begin to track all the revenue you earn on that particular creative work. You've got to really be deliberate. So that way, and to be honest, in the US and South Africa, that is exactly what they do. Really. So, and guess what? You will see, you will think it's for the sake of outsiders or for tax purposes. It's not really for tax purposes. It's even for yourself. In the company I was referring to, the investors I was talking about, on a simple accounting application, they can track 184 projects they've ever done, commission content, across 7 years. And if they want to determine the next budget for a similar content, you know what they will do? They just go back to history. And not just look at the total budget. No, they're going to look at every breakdown of the actual cost that was spent on something similar. They will even look at how much was charged by a particular cast, including most of the actors and some of the actors I saw here today. How much they charged that year, and the contract they signed. Everything is all tracked, and they can see it pronto. If anybody is going to grow, that is the kind of line. You feel like you're sitting in the comfort of your house, and you can see the numbers. And I think numbers are very important. I know when Okwe was making his presentation, he was talking about where the problems are. The problems of the numbers is a function of accounting. The problem of why we don't have international investors invest a lot is because most of the Nigerian businesses are not structured. We're so brilliant, we're so good, we've got the content, we've got the story, but we don't have the structure. The moment we begin to have the structure, there's so much money to make, more than oil even.
I certainly do agree. They always say content is the new crude now. I think the first thing in valuing your IP is to actually register those ones that can be registered.
Absolutely.
And I think from what he has said, put a number to everything, including those that do not have financial numbers, put a number to it. At this point, I will turn the question into the crowd. And I don't know, any questions? Who goes first? Tax is going to be the live wire for all of us in our personal, in our business capacities, and even as organizations and associations. I can see there are two people, I think one lady, two ladies, certainly two ladies up there. Thank you.
Good afternoon.
Good afternoon.
My name is Joy. I'm a screenwriter and also a filmmaker. Thank you very much for this illuminating session. So concerning the tax, so recently there was something I had to do with the Lagos State government, and they wanted my tax for the past 3 years. And then by the time it was calculated, it was running into several millions. And as a screenwriter, I've been working for the past 3 years with different companies, and they had been taking withholding tax from the money I was being paid. But because I didn't even know I had the taxpayer ID at that point, because I had worked for a company previously for almost 10 years, and they were taking withholding tax from my salary. And there was a lot going on. I don't even know if they were remitting the money, but I didn't have a tax ID. So by the time I was now working on my own, I was self-employed, I was working as a freelancer, and this tax issue came up. And most times, I couldn't really get my tax ID, so they usually take 5% withholding tax from my fee. So by the time I had this issue with the Lagos State government, and they were like, they brought out all these millions for me to pay for the past 3 years. And I was like, but they have been deducting 5% withholding tax from my fee. So are you not saying I still have to pay the same tax that was taken from my fee? So I'm confused at this point. If the company taking this 5% withholding tax, if they are remitting it to the government, am I still supposed to pay this money? So I don't know. I just need clarity on this.
Thank you. I think we will take the two questions together. If we could have the second question. And between Michael and Abraham, I think both of you will take the first question. Or Michael? Oh, okay. Okay, you take. So who's taking the first? Okay, the second question, please.
Good afternoon. My name is Cassandra.
Hello, Cassandra.
I'm asking with regards film producers that make films across different states. My first question is, how do you avoid double taxation and jurisdiction disputes? Then for filmmakers who make money from different avenues, distribution, what's it called, royalties, probably even script writing, acting, how do you inculcate all your personal income tax?
Okay.
To be
Okay, so the first one was about the
Withholding tax has been deducted
withholding
earlier.
tax that
Am I
had been
going to
deducted
pay?
earlier
Yeah,
and,
yeah.
and the high tax bill.
Okay, I think I should define the word withholding tax for you. So, withholding tax is an advance payment of income tax, meaning that I am taxing you now. Watch, I'm taxing you now because I don't, forgive me, I have trust issues with you. That's the government. I have trust issues with you because I don't know if at the end of the year you will walk to the tax office and say, behold, this is me, tax me. You likely will not do that. So withholding tax is just like, in case you don't come, it's just to drag you into the tax net. So the person paying you has the responsibility of deducting withholding tax of 5%. The average income tax in Nigeria is 7%. That is the lowest. Lowest, 7%. So they just charge you 7% on your income, right? 5% on your income or 2% on your income just to hold down, right? So typically, what typically will happen is that at the end of the year, you're meant to what? To file. So let me explain to you in simple terms, right? If throughout the year you earned 2 million, and maybe you did work for two production companies, 1 million, 1 million. Each of them charge you 5%, 5%. 5%, 5% is how much? That's 100,000, isn't it? Withholding tax were deducted from you. Number one, the first responsibility you have is to follow your withholding tax credit note. It's like money. They only collected the money in advance from you. The money, 2 million would have been paid to you.
And when you say follow, what's the exact?
The person who deducted the money from you, you need to ask for the credit note. And these days, it's not by, in the past, it was hard copies. But these days, you get it by email. How many of us have gotten email from LRS saying, you see beautiful hands up? You see that? That means they know. In fact, by the time you log into your own LRS portal, you will see all the withholding tax deducted from you. That's one. At the end of the year, we just talked about 2 million, right? You earn 2 million at the end of the year. If you apply the lowest rate of tax of 7%, that's PE, on your 2 million, that's 140,000. Meaning you were meant to pay 140,000 as taxes. But what you will now say is, I'm paying 140,000, that's true, but I have already paid 100,000 in what? In advance, that's your withholding tax. But you can only claim that withholding tax if it was paid by the person that what? That collected it, that took it from you. So that means you've got to track, and that's your responsibility. So in your own case now, you know what the government simply do? The way they could actually know your total revenue was because a particular company you work for was a very dutiful company. They created PID for you in those days. And that PID started following you. So all your credit, all your withholding tax was being tied to that account. The moment you stepped in, they could search for it. They could even, and how would they know your total revenue? By all the withholding tax they have been charged, they just upgraded by 95%. They were taking 5%, is it not? So your total withholding tax was just 5% of your income. So they will now gross it up to 100%, and they say, here we go. This is your money. Pay me. Do you understand? That's why you should structure.
Okay, please, I want to ask, just for clarity, because I'm still trying to learn and understand. So, sir, you say, so if the withholding tax has been remitted to the government,
Right.
does it mean now the personal income tax? Because in the case, I'm not saying that it's me. I'm just saying for those records, I'm not saying I'm the one. Okay. So in cases where you're remitting to the government and they still come back and tell you that you're owing your personal income tax of, say, 30 million naira, but you've been remitting over the years.
You're remitting withholding tax.
No, you are remitting No, withholding tax is still sorted out, but you've always been remitting, and then they just come with a figure that, okay, based off of what we saw on your social media, whether or not it is free work you were doing for them, and because you thanked so many companies for engaging you in this last year, we think this is how much you should pay. How do we go about that? What are we deducting? What would the actual personal income tax be? What exactly are we doing?
That's a very good question. The Nigerian, and forgive me, unfortunately, I'm not speaking for you people, I'm speaking for the client. The Nigerian tax people are sometimes can be very interesting people. What they do is typical best of judgment. They look at you, you have fine heels, fine face, you have 10,000 likes, and then you make noise. I got 1.5 million box office. And then you say all of that noise. They say, okay, here we go. And then they give, in reality, they don't even know that only part of the money is coming to you. They just say, pick the numbers, right? And they give it to you. But you see, what gives you peace? If you have been keeping your records, guess what? You place the book. We have the client in my firm. They billed the client 2.5 billion in taxes. By the time we finished, we knew we were paying. It was structure. We ended up not paying anything to the FRS. Because the first thing is the buga. So, to be honest, and typically what Nigerian people do is they try to look at how to settle. Because you are not keeping the books. But if you are keeping the books, you contest it. You contest it. You contest. Many people have tax consultant and a lot of people have tax consultant and not financial advisors who just come and say, let's go and negotiate. Because they have a share in it. But what you need to do is, where's my books? You defend the book. You defend it for 2-3 years until you are fine. You need to know your books before you can defend that kind of thing. And I think that's what you need to do. Yeah.
So does that help? The first question, hello, that's a complete answer to that. Okay, the second question.
One, regarding the multiple taxes. The last time I checked, NTA and NTA did not directly, address multiple taxes at state level. But the NRS, in conjunction with the JTB,
Joint Tax
Board, can encourage the state governments, can encourage the state governments to issue more clarity or to discourage the informal levied lapses that hinder, success of production or that leads to multiple taxes. So what I would advise stakeholder is to issue a petition to NRS and Joint Tax Board for clarity, to send a clarity to the state government. But in which that is why I said the law is still in work in progress. I'm very sure before the end of this month, something will come out regarding it.
Can I give a suggestion?
However, most of these multiple taxes, if you look at it very well, they are informal. Most of them are all this omonile. You went to a deep bush to shoot. Omonile, kenikom, they are informal. The question is, how are we going to capture them? And that is one of the reasons for this new law to bridge all the gap. So that is I would just say about that. Yeah.
She also mentioned that if she gets an income from different sources, royalties, she mentioned different aspects. How does she combine everything for tax?
If you get income from the
different sources, so she's a film producer
from different states.
Yeah, no, not different states. Different arrangement, different sources.
So far as royalty, they are royalty. All will be added together and be taxed appropriately.
Okay, the appropriately she's asking for. What
percentage? Are you looking for 2%?
No, she's asking what percentage would apply.
5% nominate royalty. 5%.
Royalties 5%.
Yes.
What are the other channels you mentioned? You mentioned royalties. Royalties 5%. Distribution.
Sorry, royalty is 10%. Both resident or for non-resident is 5%. For resident is 10%. According to withholding tax schedule. Yeah, it's law. I'm not doing. Know why. I'm looking at it here. This is withholding tax schedule in front of me. So royalty, moving license, distribution rights, scripts, optioning, etc. Corporate recipient, resident 10%, non-resident 10%. Resident, non-corporate 5%.
Okay, so 5%, resident, 5% individual and
exactly,
10% corporate.
Exactly. Okay. Exactly. So it's the law. We might change it tomorrow.
Okay, I know we have a lot more questions. I don't know if Mr. Ariyibi and Mr. Popogbe will agree that they could come and meet you afterwards.
Of course.
Just for this session. At other times, they are in their offices. But one thing I would like to say to the industry is that don't let us have a situation where guidelines come out from the NRS, the National Revenue Service, that we do not have an input into. Let us have guidelines that speak to the sector that we represent, the creative sector. Thank you very much.